What's going on, guys? We're going to take a look at the S&P 500, ticker symbol SPY. So we just recently took out yesterday's high price. What I'm kind of looking at here is we do have room to fill back up to 382, which is going to be about a 3-4 point move from there. And then we also have this 5-day moving average sitting at around 383 and a half. So with that being said, if the market does decide to rally off this FOMC rate hike, decision, we got to see what are we coming in at 50 basis points, 75, 100. What are we doing? What does the market want to see? I personally think, just from kind of looking around at some of the banks and what they're kind of pricing in, what they feel the market has priced in, I feel like we've priced in a 75 point rate hike. If we do get that 50% or that 50 basis point hike, I think the market's not going to like that. They're not going to like that, the fact that the Fed is not acting as aggressive as need be. Look, we've been in the decline for the past 6, 7, 8 months, and even longer in some of the small and mid cap stocks. This has been going on for quite a long time now. We should have been getting ahead of this situation, so we would not be in this predicament that we're in now. So, kind of right now, the way it stands, there's two sides to the story to kind of look at, right? There's some traders and investors that are saying, you know what, let's just flush. If we're going to continue to go down, I don't want to continue to feel the pain for the next 6 months. Let's just wash this out. Let's just get down there to those lower levels. Let's reset this and let's start to climb back higher. Okay, I agree with that, and I understand that. There's other people who are on the side of the fence that believe, you know what, the Fed really needs to kind of put on their big boy pants now, start raising rates aggressively. How much longer are you going to continue to string us around? If you just raise these rates aggressively, let's get in front of this inflation. Let's get this problem set behind us. Then we can finally start to move forward. I think that if we go 75 points, we will indeed rally a little bit today, maybe even into the end of this week. I do think that there's still one potential leg down, but I think that we got these gaps to be filled. Now these gaps can be filled at any point in time. It could be a month later, 2 months later, 3 months later, so forth and so forth. But I do think getting over this 5-day moving average of 384, I think we can at least attempt to fill this one at 389, 390 before we chop around, consolidate, and then maybe make the last leg down of this bear market. But anything over that, we're going to have room to around 400. So, it just depends on which side of the fence you're on. Which side do you which narrative do you want to kind of believe in? For me personally, I'd rather get this out of the way. But the way I'm thinking, the Fed doesn't work that way. The Fed works. They want to slow burn and churn our money. They want to continue to dive into the pockets of the normal working class here. People with 401ks are getting absolutely slandered here. Longer term holders, investors, if you've bought anything in the last 2 years, you've pretty much given away all of your gains. If you bought anything within the last year and a half, you're more than likely negative now. Anyone who's been dollar cost averaging in for the past 10 15 years, you're still looking good. But it's very, very hard and devastating to kind of watch these profits kind of go away, and it's kind of like, when is this going to end? Realistically, I don't think that we come out and start to come out of this bear market until the fall, in wintertime, in the end of Q3, Q4. But that's all to be determined. This could drag on into 2023 if they don't get in front of this problem, and the problem being inflation. If they do not get in front of this inflation problem by getting these rate hikes out of the way as quickly and as aggressively as possible, okay, then this is just going to prolong the amount of time that we spend down here in the bottom of the barrel. If we keep doing 25, 50 point basis hikes, we're going to be sitting here in the same spot next year, still wondering, when are we going to make this recovery? The faster we can get these rate hikes priced in, the faster the market can move ahead with its life. So, by the time you start hearing about bear market on the social media, by the time you start hearing about the nation and the economy is in a recession, the market will have already priced that in. We're starting to, slowly hear about, bear market territory. If you've been trading the markets, investing in the markets, watching the markets, you and I both know this has been a bear market all year, right? I mean, yes, we get some rallies, we get some green days, but, overall selling pressure and momentum has been down. If you've been invested into small caps and mid caps, well, for you guys have been in a bear market and on a decline since 2021. So this has been a bigger problem that's been unfolding realistically, coming off of all of that stimulus money and everything during, the short-lived bear market in March of 2020. where we kind of quickly V-shaped recovery. Now this recovery is not going to be that fast. We're not going to, that bear market lasted 3.5 4 weeks, quickly recovered within 2 months time. We're making all-time highs. This is not going to be like that. This is going to be a slow, more methodical, drawn out process. However, there's going to be plenty of opportunity to make money on the come up when it does come back up, but you need to be buying in. I think that we're about 60 to 75% through this bear market. So now, even though if you start averaging in, start buying companies now, not saying that you're not going to go into more drawdown, not saying that that position is just going to go straight up from here. You're going to probably experience some losses, but I would rather lose down here than be losing at all-time highs at around 450 on the SPY. If that makes sense. If we're going to go down to, let's say 360, 350, 340, 320 worst case scenario, right? If we're going to go down there, I'd rather only lose, 50 points, 40 points on my overall investment and at least be down towards the bottom half curve of this than to be, fully invested at 400 and 425, 450, right? So you got to kind of think about it in context. As people start to panic and start to go cash and start to hold their money because they don't know how long this is going to last, is when you need to start be buying in. And right now, a lot of people have been cashing out. A lot of institutions have been putting money on the sidelines. Right now is when you want to start averaging in slowly. You don't want to go and load everything right now, but you do definitely want to start adding in slowly. You want to start accumulating shares. You want to start accumulating things, even things like crypto. Everyone right now is starting to talk about crypto crashing, crypto crashing, crypto crashing. I believe that Bitcoin still has some more room down to come. 14,000, 10,000, 9,000, anything below 9,000 realistically to 6 and 3. But I think that it's a time to start kind of adding into those positions. Ethereum was at high price of around 4,000 and some change, currently trading at $1,000. It's time to start averaging in. I'd rather be investing my money 25-30% of my crypto investment at 1,000 than at 4,500, right? I'd rather get in another 5-10% at 800, 700 than at 4,200. So if that kind of makes sense, if you're a firm believer in these type of equities and in these asset classes, then you want to be buying on the way down, right? Not every day, but every big macro lay down, you want to be kind of dollar cost averaging in, because when we do come out of this in 1, 2, 3 years from now, you are going to be the ones poised to come out of this on top versus everyone else who's going to be chasing when we're all the way back up here. So this is the problem. As we come down here, nobody wants to believe that the market is going to go lower, right? It's continued to buy the dip, buy the dip, buy the dip. So you buy the dip, it rallies, you tell everyone that, bears never learn, and then you get your face ripped off, okay? So then you're thinking maybe here, okay, well, maybe it's time to buy the dip, buy the dip, buy the dip. You buy the dip and the face continues to get ripped off. So now when we start making this back trend up, now you're kind of a little hesitant about putting more money in because the last 2 times you put more money in, you've lost more money. Then when we do have this aggressive leg down here, now everyone's wanting to sell out of their position. Psychologically, does that make sense? Does that make sense? If we're on a third leg down here in this overall bear market, does that make sense to now pull your money? Okay, it doesn't make sense. If you added here and you added here because you thought we were coming back to all-time highs, fair game, fair play on you. If you kind of waited and you sat back here and you added a little bit here back, last month or 2 months ago, that's a decent entry, right? It's a decent entry around 380s on the S&P 500. We made this little attempt at a dead cat rally, and now we got this aggressive leg down. I would start to dollar cost average in here again. On any pop, I would kind of just let it do its thing, see if it gets rejected. And if we do make another leg down, I would average in here again, okay? That's just the way I would play it for the longer term goal. But it doesn't make sense to really kind of sell out of your positions, go cash, because you don't understand how long this is going to last. Just because the media and everything is covering it now, this has been going on for 6, 7, 8, 9 months. This has been going on realistically since November, December of 2021. And like I said, for small and mid caps, this has been going on, pretty much predominantly all of 2021. So do you want to be exiting those positions now when we're about 60, 70% finished with this bear market? Okay, when we still don't understand, is the Fed going to get a little bit more aggressive on these rate hikes, so forth and so forth? So I'm just kind of explaining to you guys what you guys should be thinking as far as the thought process and the psychology behind it. Not saying that we're not going lower. The S&P, the S&P can completely touch, 350, 340, $330. I understand that, but I would rather be averaged in down there than to be, kind of all in at $440, if that makes sense. Maybe it takes 6 to 12 months to get back to 440 just to break even, when realistically, if you're averaging down here, you're making money on this run up, right? I hope that kind of makes sense. If you guys like this kind of content, make sure to let me know, like, comment, subscribe. All of my information is down in the description box below. Make sure you guys are joining that Discord. Make sure you guys, if you guys are learning how to kind of build your wealth with learning how to day trade, learning how to swing trade, learning how to invest in stocks, you guys become a lifetime member to my private Discord feed. All that information is down there. I'll see you guys on the next one.